The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going in Raw, we talk about where the line is between conviction and risk management. We also discuss older generations learning to trade and external things and programs to have while trading. You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby.
No way.
4 fucking %.
You asked the exact same question with 2 words different.
It's like, fuck, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight. The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Hey guys, we are on a break right now. We are, traveling or in Reno. We will be back around the 9th of September. However, we still recorded a podcast for you. Make sure to like us and give us a 5-star rating on Apple. Enjoy. Welcome back to another episode of Pennies Going in Raw. Today is whatever date this releases on. And I think we can kind of, look, guys, we're on a little trip right now. I'm moving. Hugh is, in Egypt, and we may be in Reno right now, depending on when we release this. But we don't have anything about what's happening this week in the market because we don't know what week it is. However, we do want to talk about, risk management. You got to have that, but you also want to have conviction. So where's the line between holding and holding forever and diamond hands, and then, managing your trade with your plan? Because, there's got to be a line somewhere.
Oh, yeah. No, there has to be a line. I can definitely say I've gotten lucky a few times because, I used to swing for the fences on every single trade. And I still think it's okay to swing for the fences. Like, if you truly believe in the company and you can back that shit up with DD and and your risk, I think there's also a difference between, I've been holding Vissel down. I'm down 36% on Vissel. When I entered the position for long term a year and a half ago, which is fucking insane. It's not even small. It's not even short-term capital gains now, if I was green on it. And so when I had entered that, I usually lay out a pretty big plan. And part of that plan is, okay, where's the line in the sand for me? And for me and Vissel, that was this earnings report that came out in August. Now, obviously, as Dan said, I'm in Egypt and or we're in Reno, who knows? But that's what I usually lay inside the sand is that, okay, if they can't, I'm playing this because I believe that they're undervalued. I believe that they can really make a splash inside the technology field, things like that. But if they can't make a splash and they can't improve by this, okay, so for instance, earnings report, then I'm going to cut it. So, when we're recording this, the earnings report is now. But if Vissel doesn't lower their operating expense, increase revenue, increase profit margins, then I'm going to be done with it. And it's not because I don't believe that Vissel can't be a good company. It's because I'm not sitting here for another year and a half, just like if I lose another 30%, it's not even about the money. It's about that line in the sand of saying, okay, this is too much. This is too much conviction.
What about on some of these growth companies where you're not exactly waiting for a catalyst? You you don't want to be down 50% or whatever. Is that just something you more so have to take into account with your entry price?
Yeah, definitely. Definitely. I mean, it all comes down to what's your personal risk appetite. Like I know some guys they'll hold something down 99%. They don't even care because they still believe in that shit. And then there's other people who, it goes 3% against them and they're, shaking. And, but I mean, all of it comes down to, again, is that even if you're not a super risk adverse person, you're like a cowboy, the one bad thing about us who like to take bigger risks is that, if we nibble too much and it goes down farther, and then we nibble more onto a position, it goes down farther, then we got our hand in a headlock. And, it's one of those things where I just think that you really have to, it's all about saving your bullets, not getting too big, because you can have conviction, but if 80% of your portfolio is locked up inside this thing, you're kind of tying your hands.
Yeah, I've actually been trying to find out if cowboy was the riskiest profession you could have chosen there, but I mean, I guess they are a pretty risky profession. But yeah, no, I mean, obviously, if you're going to have that much in, for sure. But I guess going back to conviction and risk management as a whole, like, what is your thing for, if this swing gets here, I'm done with it, as opposed to just this catalyst wasn't exactly what I was expecting, or they had bad news that I wasn't expecting.
Yeah. So if they're like, so we all know that, like, if there's a bad catalyst, then I'll get out. But let's say if there's not a bad catalyst, I'm just holding it back. Because, I mean, that happens, especially inside a market like this where it's lower volatility, and you're just feeling that downward pressure. I think there's two things. One, if part of the reason that I'm inside the stock is because I feel the chart is set up, and the chart fails and it goes down, then that's one thing. But let's just say that I'm purely holding it for a catalyst. Then, I think for me, it's more about like the mental state that I'm in, because I know that, like, if I'm down on trades, I start to really let it affect me. It won't affect me. And then all of a sudden, I'll be like, I'll be pissed at the world, and that's just because my swing is down, and that's not right. So it's really one of those things where, like, okay, if I'm down 30% and I really know inside the back of my mind that this thing, isn't going to come anytime soon, or like this is just like my ego is bruised or something, then, just to get a good night's sleep and just to get some peace of mind, then that's when I feel like I have to cut it.
All right. Well, I know you mentioned the slower market kind of right now and volatility and everything. Do you kind of like go over price action in a slower market as opposed to a hot market? Because, I mean, we're seeing it kind of right now, how it just feels like good news isn't just giving us any action, or not as much as it should. We're not seeing those pre-market runners at all, et cetera, et cetera.
Yeah, no. I mean, price action is definitely, in my opinion, well, I don't want to say it's more important inside a more volatility market, but it's definitely easier to identify patterns. And I think we talked about a few episodes ago when you see that massive share exchange, inside the price action stuff. I mean, that's like a pretty good tall tale sign of like when the stock, is going to make a move. One way or the other, is when you see that massive share exchange. When we see a lower volatility market like this, the price action is harder to tell because you really can't tell, like it's telling you, hey, this is a pretty high volume day for it. But, if you go back 5 months ago inside a hot market, that was like the average day of volatility. So the data really gets skewed, like the average volume and stuff really gets skewed. So it's one of those things where, like, inside a slower market, you got to take, the way that I look at it is like price action is super important for the ones that are like the higher runners. But on like most of the time the swings, it's more like, what the fuck? Like this thing's just not moving because there's no volume. Like someone sells into the bid, it goes down 10%, like that. It's one of those things where, there's just not a lot of volume out there. So, if we sold 10,000 shares in the bid 6 months ago, it would drop a penny. Now it's dropping 5 or 6. So it's one of those things where, you really have to be aware. And that's what I mean is that, if you're a trader that's also working full time, then like it's tough because if you have a stop loss out there and someone just market sells like a pretty big amount, that can hit your stop loss, and it might have wicked right back up instantly. But again, that lower volatility just brings it down further. The best case scenario that we always talk about is that Christmas Eve of 2018 or whatever, the market was down a few percent simply because there was no bids out there. So I think that's one of those things where like you have to be really aware, and it comes down to where, maybe that systematic strategy changes inside a slower market, and you kind of have to be aware, and you have to be cognitively, into your stocks and stalking them.
Why does it seem like with lower volume moves, is it always the downside? Why don't stocks move up the same way they move downwards on quote low volume moves?
I think it's the same way that, why is it always that when you get a girlfriend, girls start hitting on you, that's kind of how I feel like this is that, when, sorry, I forgot where I was going with that, but I think where I was going with that was that, it's just how it is, like we notice the downside, much faster than we'll notice the upside. So, if my stock opens up 6%, I'm like sick, because that's what we want it to do. But when it goes down 6%, I'm like, holy shit, I'm like looking at the fucking computer, like trying to analyze, is there something that somebody knows that I don't analyze?
Okay.
What'd I say?
I thought you said analyze.
No. And so I'm sitting there, like, oh shit, like what's going on here? Like 6%. But when it's up 6%, I'm like, yeah, what's up, bitches? And I'm just letting it go, like I'm not even thinking twice about it. But when we see it on the downside, we're thinking about it constantly because that's not what we want it to do.
It's funny that you mentioned it being up 6%, so you're not thinking about it. If it's up 6%, I'm starting to sell a little bit.
Not me, bro. I'm a cowboy, remember? Yeehaw. I'm going for the home run. I'm going for the home run. I'm there for the bag.
Okay, well, fair enough. So, price action in the hotter market, why does it seem like, is the hotter market, does that just mean we got volume now?
Oh, yeah. I mean, volume precedes price action. So the way that there's things that people can say, but hey, an FDA approval inside the market that we're in right now in August moves 15-20%, probably ends the day red. In January, that bitch would have gone like 500%. On the same thing. So, and that's because of volume. And I mean, you could say what you want. I know that when I talk about this, not everybody likes that, and that's okay. But algos really run the market. They are most of the volume. You can see it right now. Okay, there's no algos out there, and stocks are getting killed. And that's why when people talk about it, when people talk about it, hey, if we all just bought this stock, AMC was controlled by algorithms. There was hedge funds backing that, making AMC go crazy. That wasn't you and my frat buddies buying $5 worth, making this thing go. There was real volume behind that, real money behind that. And so, when we look at the small cap market right now, okay, yes, retail trading is huge compared to what it was 5 years ago. Hell, what it was compared to a year ago. But that still doesn't even come close to the amount of volume that the algorithms bring into the market. And so when they're gone, like now, you see what happens, and the bigger part of the story is that we're so emotional as traders. So what ends up happening is that stocks go red. Okay, people get emotional, they'll buy some more, buy the dip. It goes down a little bit more, and now they're panic selling. So now, you have all these people who are underneath water on these stocks, now panic selling, creating a bigger sell-off. SPY was green, I'll see SPY red, not even 0.5%, and small cap world is down 10 across the board. And that's because people get so worried that we're any red day from SPY is going to turn into, a bear market, that they're just selling anything and everything. And so that's another thing that goes to show when algorithms aren't there and you have this emotional selling and there's no algo to pick it up, look what happens. Small caps get killed. I mean, there's stuff like TBLT was trading at almost $2, back to 50 cents. Like WTRH was trading at $5, back down to almost $1. And that's and it doesn't take much for that to happen. You turn the algos off, you have a little bit of emotional selling. Like, could you imagine if SPY wasn't ripping? Like, SPY's been ripping for months, a year. SPY has been ripping for a year. And I mean, you still have people that are super worried. Like, relax, we need the algorithms.
It's weird that, you mentioned how the small caps go down so much with SPY just down a little bit, when it used to seem like SPY would work in inverse with small caps. SPY goes down, small caps go up. Why does that relationship seem to alter so much from inverse to just running with it?
Well, so everything in finance until last year was rather, how do I say this? Everything. Yeah. I mean, it was kind of dry, like you went through market cycles, and the market cycles were the same for decades. Like everybody went to the Hamptons the same week. Everybody's kids went to the school the same school, shit like that. And then all of a sudden COVID happened, and all these retailers came, and it screwed everything up for all the finance people and all the market cycles and everything. So what used to happen is it used to be one of those things where like, hey, SPY's down, let's stop screwing with SPY, let's go to small caps. And then all these hedge fund managers, that would usually be trading, large caps and stuff, came to the small cap side. And so small caps would get bid up because there was tons of volume and new money coming in, and, supply and demand comes down to it. And then, all this retail trading came out of nowhere, and you had stuff like people buying $10 million worth of Tesla options that are 1,000% out of the money with 6 months to go. And that was like squeezing the stock. Like some retail swinging dick with 3 million was able to affect Tesla. And it was like, holy, it's like these fund managers now like, well, who the hell's doing that? Like, is that you? And they're like looking around the table like, well, that's not me. Is that you? And it brought this whole new opportunity for everybody. But in that also bought a world where the market cycles were messed up. People, hedge fund managers weren't having to flee to small caps because Tesla was ripping 5 to 6% a day in either direction. And so I really think that that's one of the reasons that, it's so weird and I mean, even me, like I've been here 8.5 years, and it's even weird for me to really see like when August was hot for the first week or something, I was like, what the hell last year? I was like, what the hell is this? Like, usually I'm losing my pants. And so I think that for the guys that have been inside this game for 30, 40 years, they really had no idea what to do. They were like, what the fuck do we do now? Like, have you ever been inside a market like this? No. Have you? No. And so I think that that's really part of it, is that the game has just been changing so much away from what everybody was so used to inside the finance industry, that everybody was kind of like, okay, I guess we'll trade Tesla today. There's enough volume there, and it was things like that. So that's what I really think is why we're seeing kind of this sporadic movements and inverses, where 1 week it'll be together, 1 week it won't be. That's because there's people with a few $1 million that are able to, kind of change momentum in stocks like Tesla.
All right, well, moving on to our next segment, which is programs and shit we have on our desk. Do you want to start with shit you have on your desk or programs?
Programs.
All right, programs. I think we can start with the easier ones, with trade ideas, scans, Benzinga Charlie, Discord, Twitter. Obviously your trading app.
Yeah. I mean, I'm just looking around. I have up TweetDeck, Discord, 2 other chat rooms, trade ideas, and scans. And then I also have on Zoom, but that that was for a different thing. And then I also have up my Roth IRA, checking that at all times. And and that's it. And
Do you
my
come on
TD
go
account.
over a little quickie on scans and trade ideas to some of the newer people?
Yeah. So trade ideas, the way that I coded my trade ideas is that there's basically 5 different sections for trade ideas that I have: top gainers, top losers, and then it's based on volume. So then I have another one that's just based on volume. And then I have let's call it the momentum scanner. And what that does is that it filters everything, like all stocks, on the trade on the New York Stock Exchange and the NAS. And so it'll basically tell me when they're moving up in high volume, high relative volume, when they're moving inside a sector. So if an entire sector is starting to get bid up, stuff like that. And I don't really pay much attention to that. The one that I started to pay attention to is that when it comes over to, when it's come up on that scan a certain amount of times, then it gets moved over to the other one, and that other one is a little more detailed, and that one's a little bit more detailed, and then that's when I start to pay attention to it, because now it's like, okay, this has been happening multiple times. And then on top of that, I also have a dip buy scanner, and that's basically like, hey, this thing has super unusual volume. It went up 150%. Now it's down. Now it's only up 70%. This might be good for like a quick little pop. That's pretty much how I use trade ideas. And that's pretty much how I use trade ideas.
Now, I know you have a lot of monitors. Obviously, you don't need 4 or 5. You don't even need 2. I think 2 is, about all you need, especially as anywhere before you get to expert trader. Mainly, I just have the broker directly in front of me on the main one, on a 34-inch widescreen. And then on the other one, I just have the trade ideas, and then I also have scans on the main one too, just to the side, and then just anything.
So you
else
don't
like
even
this.
use Thinkorswim, right?
No, I just use TD Ameritrade. The
That's
website.
crazy.
Yeah,
I mean, that's mind blowing to me.
You can still assign it to Stream Deck, which was gonna go on my shit I have on my desk. And Stream Deck is just like we did a giveaway on one, but it's basically turns trading into a video game. You can have like buy 10,000 shares, sell 10,000 shares, and you can just bow as fast as you want. So,
how do you know what stock it is?
You type it in, or it's like, this is just for like day trading them really fast. It's
so you
fun.
can become an algorithm basically.
You
buy one share, sell one share.
Yeah, it's more like you become a gambler at Las Vegas on the craps table.
Oh, dude, they always win.
Yeah, no, you become really, really good. But on your desk, do you have anything that you'd recommend that's different? Like, obviously, you have your sticky notes for.
I do. Wait, actually, let me see what this is, because this might be important. My Roth conversion form for this year. So that is important. But no, really pretty much on my desk, it's just a bunch of sticky notes, and I have, if you guys are watching on YouTube, it's I have this is what it looks like. It's just Post-it notes on papers and stuff, and me just writing, honestly, nonsense, that I have to, but it's kind of like shorthand, because most of the time I'm looking around at everything that I don't want to, lift my head up, or down, I should say. I don't want to look down too much. So it's more like I just scribble myself to remind myself to do other things, because one of the biggest issues that I usually have is that when I focus on trading so much, I forget to do anything else. I completely forget to do anything and everything else. So, when I used to be at home, my parents, I would they would tell me make sure that you get the meat out of the freezer, and by 3 p.m. and I would totally forget. And then they would come home at 6 p.m. and, there would be no thawed meat. So that's pretty much why I use it. And then it'll also be things to check up on. So if let's just call it Mr. 4-8 on Twitter sends me a DM hey bro, check out this SPAC, and obviously in that moment of time, I'll scribble it on here, because of the amount of DMs that we get, I'm never going to remember. So that's pretty much why I use sticky notes. And then it's just constant reminders, it's literally little stuff hey dumbass, stop oversizing. Little notes to myself, little love letters.
It's so weird that as traders who are always on our computers, we still prefer sticky notes as opposed to just, the thing.
Yeah. Yeah, I mean, I have cabinets full. Like I can't even open up some of the drawers inside my cabinets. That's how bad it is.
Yeah, so mainly just a clean table. I say clean, so take that with a grain of salt. I also have like next level hydrogen water on here too. Just as a reminder that any stock can do anything. I guess at our last segment, before we just have a little chitter chatter, will be, for the older generation. Someone asked that, some tips for the older generation. They're still kind of learning tech too, and they want some stuff to kind of, I don't know if they meant like learning experience or money and stocks to leave to their grandkids. Which is a good question. We do have a large demographic of mainly males. However, we do get up there in age. So I think one of the cooler things about trading is, especially if it's with your grandkids, is that they probably understand technology and you'll probably get them into investing and you guys can kind of learn together. You can kind of teach them the basics of trading while they kind of teach you, more about the tech.
How to turn on the computer. Yeah. I think this reminds me of a story of a mother's son who they weren't really ever close, and we received the DM last year, and she had said, "Hey guys, like, listen, I haven't made $1 trading, but what this has been able to do for my son and I, like we haven't been able to talk about it, the same subject in years. And now we're both just so, ingrained in trading and we just love it so much. And we get to talk about it and it's constant content. Like, thank you. And so that's what I kind of think of is that part of what is so cool about this is that, obviously you have to like it, but it's not one of those things where it's not one of those things where it's like hair and makeup. You can like hair and makeup and I like sports and we both like trading. I think that's so cool. So from that perspective, first off, if you're older and technology doesn't come as easy, take it really slow. Like most of these, like Thinkorswim and most of these platforms are really easy to get overwhelmed by for even like a younger person that knows about technology. So if you already are at a disadvantage inside that game, take it super slow. Every single platform has people and has webinars that'll show you how to set certain things up and where the most important buttons are. And so take full advantage of those. TD Ameritrade, Fidelity, all of them. When you sign up with TD Ameritrade, and you probably ignore the phone call, but somebody calls from your local branch and asks you if you need help setting anything up. Okay, 99% of us just say no, go fuck yourself, whatever. But use those people because they're there to help. And then the other thing is that, as Dan was saying, was hey, you can always ask somebody. There's tons of YouTube videos, if you can figure out YouTube, you can figure out trading. Cause it's one of those things where hey, how do I, look up the basics of Thinkorswim, things like that. I think from that perspective, just taking things slow. If we usually tell you hey, paper trade for 6 months, then maybe just spend 6 months learning the broker.
Yeah.
And learning.
And there's also easier ways for each of them. I think, like I was talking about earlier, I think the browser version is easier than the apps for all of them. TDAmeritrade.com, Webull.com, and and Robinhood. I think if you have trouble with technology at all, I think Robinhood's your best bet. Especially, that's also what I recommend anyone that's new to trading, that's not going to be trading a lot, to get into, just because it's so. And yeah, I get it. Fuck Robinhood, delete Robinhood. But the thing is, it makes it so obvious what's happening, what's going on, why your money's up, what you lost. It's the best for sure.
Yeah, and then just touching on the part that says they want to leave something for their children and grandchildren. This goes into more the personal finance side of it, but things like that. If you want to leave people something, and you want your estate to be pretty, like you want your estate to look nice, something like that. The biggest way that you can help out your beneficiaries is, one, having a detailed will, and two, tax planning. Okay, you can have $10 million. But here's the thing, is that the difference between doing a few things can be the difference of millions. Okay, so my best advice to give to you, no matter if you have $5 or 50 million, is to find a really good estate planner and someone that can help you, because that really is going to be the difference. The difference of opening up a certain account can be the difference of like 30% to the government or not. And so I think that I understand the part about wanting to make money to leave to people, but I'm telling you, even if you become a pro trader, it doesn't matter if 50% goes to the government. Okay. You can do things that will save you into the long run, and will save headaches, and will save money to your beneficiaries. So just a PSA, if you're, that's so important, I think. And then from the trading side of things, if you're older, it's one of those things where, you probably, again, like I said, need to take things slower.
You probably got all the fucking time in the world, if we're being for real.
Yeah. Yeah. And the thing is that,
not all the time in the world, all the time in the day. Not all the time in the world.
Your responsibilities. Yeah. And so I think it's one of those things where you really need to take things slow, but also, have fun with it. Again, start slow, with beer money, same thing, start slow with beer money and just work your way up, learn, read.
Like diabetes medicine money.
Yeah. And so it's the same thing like we tell everybody else, nobody's born a great trader. So if you're older, don't think that you can't do it. It's the same thing like when you see people going back to college, it's a fantastic thing. Anybody can go back to college. Anybody can learn how to trade. You just got to take it slow, and don't get overwhelmed. Same thing, like don't get overwhelmed trading. Don't get overwhelmed with the technology. Just take it slow. Say that hey, I want to learn how to log in by 2 months from now.
Yeah,
small achievable goals.
This technology is a lot different than your Excel sheets and shit like that.
Yeah.
Don't take a fucking computer class to learn how to trade on TD Ameritrade. They're completely different. Like I said, buy Robinhood or download Robinhood and buy a stock, and it's simple as can be. I think my grandmother still calls up Vanguard to do her shit, so she gets a thing in the mail but she's done a hell of a job investing for herself over the past 60 years.
That's go grandma dip.
Yeah,
tell you what.
That's how she made all her money. Just is investing.
Really?
Yeah. I mean, she was
so
a
you do have it in the blood.
I have it in the blood. But it's not like she'll be like, yeah, come on, it'll be Steel's a good buy right now. I'll be like, Steel. Just in general. I'm like, Grandma, if we're front loading shit, give me the ticker.
She's like, honey, I got in the backyard.
My grandmother doesn't sound like a fucking hillbilly.
But I don't know. I've never had the pleasure to meet Grandma Dip.
No one in my family sounds like they can't read. They all are they're pretty smart for the. I looked up
anything south of Delaware, and I just instantly put on a southern accent.
Fucking Delaware? They're 40 fucking states, dude. I looked up the average income of where I live right now today, and let me just get it just so I can. And by today, I mean, yes, I looked it up today, but also it's where I live today. It won't be by the time this podcast comes out. Okay, median income 23,400, household 38,900. That's
I lost that today.
That's kids and shit.
Whoa.
Yeah, that's crazy.
Actually, now I want to see mine.
Yeah, it's probably a little more. Yeah, no, I don't live in the nicest of areas by any means. But again, I am moving. I'm leaving all my shit. I'm starting fresh.
All right, you ready?
Yeah.
It's where'd it go? Education, health, economy. What was underneath? A comedy?
Just Google Hoboken.
Oh, median household income for 2019 was $150,000.
Yeah, so like 4 times more than us. But are you getting fresh? Are you getting fresh out the udder milk up there, or are you having to get it from the store?
And sometimes it's not even at the store. I mean, maybe I should just park accounts at the lawn.
Yeah, no, I mean, we get it fresh eggs, fresh sisters. If you're, well, most of them aren't very fresh, but you get the point.
That's fucking disgusting.
What do you mean?
What do you call it? That's crazy. Well, I mean, I'm sure, when this comes out, you'll be in Houston.
5 more minutes of the podcast, and we're just like, okay.
Talking about grandma dip and southern accents.
Now we're on to incest.
Well, by the time this comes out, you'll be all moved into Houston. I don't know if anyone else got an invite to Dan's housewarming party, but mine still inside the mail.
A fucking housewarming party. So
no. We gotta have one. I mean, it's gonna be like that's where we'll do PGIR live too.
It's a 1-bedroom apartment.
PGIR live too, bro. Right in your apartment. What a better place?
We could do it.
We already got the studio.
Rooftop pool.
That would be sick.
Didn't
you say there's some like celebrity that's living there or something like Tom Brady?
Yeah, it's Tom Brady. No, I don't want to reveal who's gonna live on my floor because it's like, what if he's like, one of his friends listen, they're like, hey, you're gonna be living here, and they're like, how the fuck do you know that? And then it'd be like, oh, he's giving out who's living on his floor. So maybe my goal is to become his friend. So I'm gonna like be poached up,
extort him for the pod
on the floor. Yeah, and I'm gonna become his friend, and whenever I drop a selfie of us two, that's when you'll know who the neighbor is. Yeah.
Eli Manning moved out of my building 1 year too fucking early. I would be post outside of his apartment, just sitting there waiting.
No one cooler than Eli. All right, guys. Well, we've loved talking to you guys I hope this drops on a Wednesday because it's far too short for a Sunday episode. But be sure to leave us a 5-star rating, and like and subscribe and a retweet and all that good stuff. And y'all have a blessed day. Mwah.